Many smaller enterprises are using non-accounting staff to keep partial accounts in Excel. Partial accounting is time-consuming and causes stress to admin staff. It also takes away many valuable man-hours from the admin staff. Hence, it represents a hidden cost to the boss. Typically, your admin girl spends 30% to 50% of her time on accounting chores. Can you imagine how much hidden costs you carry every year? Besides carrying this hidden cost, you still pay for outsourcing, right? Perhaps another $5,000 to $6,000 yearly. So how much are you really paying every year? What is the combined cost of 1, partial accounting, and 2, outsourcing? Let's say you pay your admin girl $18,000 a year. Assume she spends half her time doing partial accounting chores, perhaps another $5,000 to $6,000 yearly, and then you are carrying $9,000 hidden costs annually. Add your outsourcing fees, say $5,000, and your real cost is $14,000. Well, isn't outsourcing actually a false saving? Why continue to do partial accounts, which are quite useless for tax purpose? Why pay again for late management accounts and tax compilation? Relax. Diya accounting technology allows anyone to do full set accounts. Diya is faster and less tedious compared to partial accounting. No accounting knowledge is needed with Diya. Do full set accounting with one quick and easy entry. Just watch this.
Now Diya is comprehensive, and it allows you to record your purchases, sales, sales return, and any other business transactions. With one easy entry, you can look forward to full sets of accounts. Here is an illustration. In the reference column, we shall record the supplier's invoice number, followed by the date. You can give remarks amiss. Call up the pop-up list of suppliers and select Global Pet Supplies. Click OK when done. Diya will take care of the necessary for you. Simply enter the total amount of your supplier's invoice, and Diya will convert the simple entry into complex double entries. This is a critical step. Diya will convert your simple entries into double entries so that it can update your general ledger. Once this is done, you can call up your trial balance. With the trial balance in place, you will be able to generate your profit and loss statement and your balance sheet. Diya does not stop there. It goes on further to give you your CAR report. Yes, the CAR report goes beyond the standard P&L and balance sheet to make the Diya an indispensable management tool for smaller companies without a financial manager. Ask our consultants for further assistance. Do not miss this rare opportunity to slash costs. Pay less, do less, and get more with Diya. Call 633-625-75 or 633-94998 today. Diya is awesome. Full set accounts with one quick step. Easier than partial accounting. Very much less tedious. Cuts down hidden costs, frees up productive resources.
No standard accounting system out there has got this feature. CAR stands for Key Accounting Ratio Report. Let's take a quick peek at the liquidity status report. What do you see? Well, probably 3 numbers that says current assets, current liabilities, and liquidity ratio. Do you make sense of this? Do you know what is liquidity ratio? And do you know why it is important? If you don't, it is perfectly normal. You are not alone in this because financial management is an area that is seriously neglected by entrepreneurs who do not have the basic training in financial management. They simply cannot see this, which is why even very successful companies went bust, even though the business is good but financial management is poor. They work themselves to a position where they don't have enough working capital. Cash is king in business. You can run into serious problems the moment you run out of cash and working capital. So this liquidity ratio means your current assets exceed your current liability by over 2 times. To be exact, 2.38 times. Does it make sense to you? This is the ratio of current assets and current liabilities. But what are current assets? What are current liabilities? If you don't know the answer, you better start to know the meaning of these 2 terms. Current assets are liquid assets, which are assets that are already in cash or convertible to cash within a very short time. It takes the form of debtors, customers who owe you money, which is a paper asset that is convertible to cash. It can also be in the form of stocks convertible to cash. Next, we talk about current liabilities, which by now you should have guessed that it is something that you are due to make payment for within 12 months. So, on one hand, you have got your current assets. On the other hand, you have got your current liabilities. In this case, your current assets are more than your current liabilities. It means that you are very well placed. You have good working capital. Now, what is working capital? I have already given you a rough idea. All you need to do is click on this working capital report to get a much clearer picture. In this case, you can see that you have got trade debtors, customers owing you money about $71,000, some petty cash of $800, bank account of $329,000, and cash sales float. Now, here you have money owing to the director, $132,000, an intercompany account, provision for taxation, goods and services tax paid on the total basis. So if you add up all your current liabilities, it gives you this amount of $169,000. Subtract that from the $401,000, which is your current assets. Then you have working capital of $232,000. So this working capital now gives you a clearer picture than just the liquidity ratio. So do you agree that such ratio and reports are important to every business, so that they do not run their business day-to-day blindly and precariously without understanding what is working capital? No other accounting program can give you reports like this, which is why we urge you to make your upgrade now. Put yourself in better control. Empower your managers to make more informed decisions with TradPack Enhanced IAF version. Now let's move on to what the CAR report, or Key Accounting Ratio report, as mentioned earlier. It's a very comprehensive report that will give you a very good feel of your business. So let's put in the period starting from the 1st of November 2014 to the current date. Now this report will tell you for the period specified your total sales turnover, your gross margin, and your gross margin percentage. Now, would you agree this is very useful information? Then it goes on to tell you about your sales turnover at daily, monthly intervals. You can see on the average, you are doing $143,000 monthly and $4,779 daily. This is really useful information that will allow you to make informed decisions. But that is not all. The CAR report, or Key Accounting Ratio report, is something you will find amiss in any ordinary accounting system. This is alien to smaller enterprises that do not have a full-time accountant to derive these figures from the P&L and the balance sheet for them. And even if you do have a full-time accountant, often you will find that accountants don't even have the time to do up this report for you manually.